Well, good morning, everyone. Sorry about that. I go to open up the room as the market opened, and I realized I haven't opened the room yet. I got a little sidetracked reading some emails, and I do apologize. Hope I didn't leave you guys waiting too long. All right, so the market just opened up. All right, hold on a second here while I get my bearings. Okay, I'm all set. Put the email away, Eric. Step away from the email. All right, so the market's just opened up, and it looks like we opened with a little bit of a gap to the downside, a fairly choppy overnight session, but trading left off way up here around the 43.35 mark, which should be a pretty familiar number. That's been a number that the NQ has been battling with for, well, actually, the better part of this week. And they tailed off. Market opened down here around the 43.20 mark, so there is a little bit of a gap, about a 15-point gap just above here. We'll see whether or not they try to get into that. Yesterday's session, also a little bit of a roller coaster, but the morning the market tried to advance, and then by the afternoon things turned over. We got a trend change signal here on the Eagle. This one would have been a little bit of a nail biter because we haven't seen a real good test of the extreme. Even so, it is a trend change signal. It would be worth trying. I would probably take the signal below the swing low, especially given that we have kind of this little double tap going on here. Very often that will form a double bottom. We'll see a retest of the high. I would really try to cover it above the high. And you can see I can't reach that far, so can I reach above this high right here? That one I can do. And like I said, this would be a nail biter because I would anticipate that the market would try to give me a better test of the extreme here. As it turns out, this was the test of the extreme. Now, I know you're saying, well, Eric, how can that be the test of the extreme? You're always telling us the test of the extreme has to be a lower swing. Well, these are the most reliable. But sometimes the market will come and it will kind of overextend itself, kind of blow itself out, and then it will reverse. It is still a test of the extreme. It's not as common and usually not as reliable as this kind of thing, but still something to bear in mind. You can see we had essentially a triple top, if you will, even though the market seriously fudged here by about, well, 8 points before reversing. So I would be concerned that somewhere through here the market is going to try to do one of these, and hopefully all this resistance here would knock the market down, and then prices would continue lower, and I would be okay. That would be the plan. Hence the deeper stop. As it turns out, it was a non-issue. The market just took a nosedive from there, hit our high probability target, gave us a little bit of a reaction, and then came back and did it all over again. So yesterday, fairly active day overall. And here we are still trying to get a little bit of traction. All right. No, that's a messy signal. I was going to say I'll take a look at a buy there. Well, we do get a first micro-macro cross here in the hawk. Have we hit our target yet? Oh, look at that. They just kissed the target. I got a chance to try to duplicate this one. Oops, as the market slips past me. Doggone it. Let's see if we're getting our trend change signal here on the Raptor. Okay, we are getting a cloud crossover on the Raptor. What I'm going to do is I'm going to enable an order. There it is. Okay. So I'm going to try to take advantage of this cloud crossover. And it's still very early. I could just go in with a single here, maybe a single with a runner. I'm going to swing for the fences here this morning. Okay, well, they're going to back off of that, so I can cancel the order. In the meantime, Rod asks a question. Rod writes, Eric, you mentioned it is important knowing where the buyers and sellers are. If there is a buyer and a seller for each side, what do you mean by knowing where the buyers and sellers are? How do you determine where they are? Well, it's funny you should ask me that, Rod, because Tony asked me a similar question via email. All right, the market's not doing a whole lot. So let's take a look and see if we can't figure out where the buyers and the sellers are at. Another cloud crossover trade, by the way, here, folks. I'm going to try to do this one on a runner. And I will take it on the hash mark here, a little bit of a leap of faith. No, they're going to knock it down again. All right, we'll ignore that for a moment. Let's talk about buyers and sellers. Where are the buyers and sellers at? Well, if you're using the mean Renko bars, determining the buyers and sellers is usually pretty straightforward because the buying and selling shifts wherever the market makes a pivot. Right? Wherever the market turns, that's where the buyers and sellers change control of the market. So actually, I'm going to go to the Eagle because it's a little bit more condensed. So yesterday, I think we could agree that out of the open, the buyers were in control of the market. Right? The market made a nice move higher. How do I know where the sellers are? Well, I know there was, active selling right here. I'm going to do my best not to confuse you. There was active selling right here. There was a little bit of selling right there. And then there really wasn't much more selling until we got back up here. Notice I've highlighted the bars with the wicks on the top. That tells me that there's active selling. If this active selling is also combined with a turn in the price activity, that tells me that there's very strong selling, at least strong enough to turn the market, sometimes for a little bit, sometimes for only a bar, and sometimes it's able to actually make the market retrace somewhat. So out of these three, 1, 2, and 3, so 1, 2, and 3, which one do you think has the strongest selling associated with it? Number 1, number 2, or number 3? Yeah, that's right. Most people are putting in number 3. You're absolutely correct. So what you should be seeing is you should be seeing a market that's got a considerable amount of upward momentum, and then all of a sudden the sellers step in and they're actually able to move the market lower. The next most powerful or strongest selling occurred here at level 1. The weakest selling was here at level 2. Right? Because level 1 actually saw the sellers move the market a little bit, then they came back, the buyers did, and then the sellers tried again to push the market down unsuccessfully. Then the buyers quickly took the market back and rallied the market. Well, what ended up happening is you had all this selling right around this level. So you had sellers, see, I can extend this back here. So we've had active selling all through here. Every time the market got near this price zone, sellers started to sell, right? How do we know? Well, we have these bars with these wicks, and the market moved lower. Prices tried to come up. Ooh, we got double bars with wicks, and the market moved lower. That tells me there's a very, very strong selling here. Buyers dig in, push the market higher, sellers get busy, and they try to recover the downtrend. The buyers show up early, they start to push a little bit higher, sellers try to recover the market again, and watch what happens when the sellers lose their grip on the market. All of a sudden they realize they're on the wrong side of the trade, and they have to get out. And that's what spurs the market higher. That's what made this accelerate so quickly. They could not find any new sellers until the market got up here. So you're absolutely right, Rod. In every trade, there is a buyer and a seller. There's always a trader who thinks the market's going to go higher, and there's always a trader who thinks the market's going to go lower. These guys that were all selling through here think the market's going to go lower. Then the market proved them wrong, and they had to get out really quick, and that's what caused this little bit of a rather quick uptick. Then the sellers try again. They say, okay, well, 43.50 is a better price. And then they start to sell 43.50, and the buyers who think that this trend is going to continue higher start to dig in, and they start to buy it up. Now the sellers get more aggressive again. They say, no, 43.50, this is where we're selling it. And the buyers, look at this. Look at how the buyers are holding this support level. And now the buyers think they have the trade in hand as they push the market to 43.60. See, did you notice here the sellers tried to recover the market again on this little candle right here? And then the buyers came right back and pushed and pushed and pushed. Now this many times will develop into one of these, again, where the sellers find themselves trapped on the wrong side of the trade, and they have to get out. But what happened this time is the sellers really dug in. The buyers tried to rally, sellers came back. Buyers tried to rally, sellers came back. Now all of a sudden it's, uh-oh, who's on the wrong side of the trade now? It's the buyers. Right? So you have all these buyers that bought down here, more of them who bought here. See, the ones that bought here or who bought on the breakout, there's a lot of breakout traders. The ones who bought on the breakout they're the ones who are running for the hills right here. They're exiting with a loss. Well, if you're a buyer, your exit order is a sell order, right? So they got to get out there. Now these guys are seeing the market threaten them, and somewhere through here, we're going to see a little buy attempt. Oh, see that? Very tiny wick. They tried to push it up. Sellers slammed them down. Oh, there we go again. Here are the buyers digging in. All the ones who think that 43.35 is a good price to buy are coming back into the market, and they're buying the market up now. Now what you need to know is that a lot of trading nowadays is computer driven. And most of the time when we're taking a trade, it's not like we're taking a trade against each other. It's not like, Rod, you're buying one side and I'm selling the other side. It's possible, but it's extremely rare. What we're doing in most cases is we're trading against the institutions. So if we take a long position, it's very likely an institution is on the other side of our trade taking the short side. Now, how can that be, you say? Well, why would an institution take the other side of the trade? Well, first off, they know maybe a little bit more about where the market is going than we do, but not that much more. Secondly, they may have an entirely different agenda than what we do. You know, here on the Eagle Trend Trader, we're just looking for 40 ticks out of the NASDAQ. We're just looking for a very humble $200 profit. They may be looking to profit on a little scalp to the uptick. So buying 43.35 is not unreasonable for them. They may buy in here with, I don't know, 100 contracts, move the market up a little bit, scalp out, and then they may start selling with the intention of a larger downside target. Or maybe they're trying to, maybe the trader is tasked with getting in 1,000 orders, 1,000 short orders before the end of the day. Well, you just can't throw 1,000 orders in at one price. The market will plummet. You know, there'll be a huge, huge gap. So they need to scale in. You know, they may have sold 100 contracts up here. They may be trying to sell another 100 contracts around here, and so on, right? So it's everybody has different motivation. You should never think that everybody has the same motivation that you do. Buyers and the sellers can make money going, or regardless of which way the market is going, depending on what their motivation is. So here we have the buyers trying to fight the market up again. They're trying to defend this area. And then what happens is that, well, the sellers show up early. We get our trend change signal. We get our with trend signal. And then the market just unwinds. All these traders here who thought it was a good idea to buy find themselves on the wrong side of the trade. And now they have to exit. And this is the dance that goes on time and again, all the time in the marketplace. Your job as a trader is to try to figure out who is in control of the market and then structure your trade accordingly. Sometimes it will be easy to tell. Sometimes, like this morning, it will be nearly impossible to tell. And you just have to wait. Generally speaking, whoever owns the last swing controls the market. So the sellers made the last swing here. It's lower than the swing before, which is lower than the swing before that. So technically we're making lower highs. And now they're going to try to make a lower low. If they can make a lower low, then the sellers have control of the market and we can look to short. All right, there we go. So it looks like the sellers are in control of the market now, and we might be come back here into the hard edge, generate a short signal, and that would give us good enough reason to sell. If, however, we drift back in here now, and we get somewhere near the middle of the range, well, and then the market comes down and does one of these, well, then the buyers are in control, and we're going to be going in a sideways range. See, here come the buyers. We've got a sideways range as it is, so you shouldn't expect any single breakout to, just have dramatic follow-through. We're going to see the buyer's reaction to this breakout. Because honestly, if you think buying at 43.13 is a good price, you're going to think buying at 43.10 is much better, and buying at 43.05 is a bargain. Now we need to see how serious the sellers are about maintaining this breakout. Buyers have tipped their hand. We know the buyers are prepared to let the market get to 43.10 and currently no lower. We'll see if it drifts up here now into the range. If the sellers try to knock it down around, well, the sooner the better, but let's say they let it drift all the way to the hard edge, which would see it somewhere around 43.20. And then recover the market, that would still be a good sell signal. If, however, it starts to drift up here near the highs again, near 43.30, well, then we're definitely within a trading range. But right now, things are looking very bearish. Okay, so we're not getting a signal there. Oops, I was just going to come take a look here at our other tools. I was going to say, I bet you we got signals on the other tools, and we did too. Here's a nice raptor signal, the cloud crossover. And you're going to notice that sometimes the DTS tools will give you a signal in advance of something happening. So here we are with our trading range. And we're producing a sell signal. We are near the bottom end of the trading range. This is going to be a nail biter to be sure, because at this stage, the market may well be moving sideways, right? We don't know. But it's still worth the chance, because chances are very good when the market tests the bottom end of the range here that it's going to fudge it at least a little bit. So we enter, the market comes down a little bit, it fudges a little bit. We can hopefully hit our profit objective, and then prices continue lower. Now, I just noticed none of my bars have wicks or tails. What's with that? If this happens to you, go to your data series. Yeah. Check here on the wick. Make sure you're not on black. There we go. So change your wick color. There, now your wicks are back. All right, so that was a good signal in the sense that it had at least enough to get to your profit objective. It would have hit your break-even trigger. And then if the market goes from there, well, then that's fantastic. And if it retreats back into the range, well, you still manage to capture a little bit of a move there. Okay, so it does look like we are in a downtrend this morning. That's probably the biggest challenge for traders, is understanding who is in control of the marketplace. Oh, hi Ken. Ken says, I just got the new trade manager. How do I change the quantity so that it's 2 contracts on every trade? All right, Ken, you can change it If you're using this trade manager, don't worry, I'm going to show you on the Trailblazer here in a second as well. So the trade manager has the risk component. That's how you can tell the two. Your quantity is up here, so you would change your quantity to 2, and you would go from risk mode to manual mode. Now, whenever you set an order, it will always have 2 contracts, regardless of where you place your stops. So just make sure you don't overextend yourself and end up risking more than you can afford. All right, so that's how you do it on the trade manager. If you happen to have the Trailblazer, that's this guy right here, you can preset your quantities up here. So what I've done is I've set one contract with a target of 20 ticks and one contract with a 0 tick target, which means it's going to be a runner. To enter these orders, you right-click, and that order is live the moment you put it on your chart. So I have a tendency to place it away from the price and then move it in as the signal develops. Okay, now we're near 4,300. That's near yesterday's lows, so we can anticipate some sort of reaction, but I'm just going to show you how this works anyhow. So there's the double dot. I can tell you if this bar prints, I'm going to get a signal down here. Oh, no, I'm not. I'm going to get another. There we go. So you see I've got 2 contracts. This is getting a little hard to see. There we go. I've got my profit target on 1 set at 20 ticks. And if this fills, then I'm going to only have 1 left as a runner. Now I'm going to set a stop. All right, so you see now I have 1 left. See, quantity of 1. It hit the break-even trigger. And so now my trade is down to break-even. And we're seeing a little bit of a reaction now because of this 4,300 support area. But that's how you can set that. You can set your quantities. You preset your quantities. You can preset your targets. If you want to be all in, all out, just go, 2 contracts and set your target. If you want it all to be a runner, just go 2 contracts with a 0 target. Ken says, my quantity is dark gray. It won't respond to my mouse. Okay. Are you set on manual mode? I'm going to assume that you have the trade manager, not the Trailblazer. So correct me if I'm wrong. Switch to manual mode, and that should allow you to change the quantity up there. If you're doing it from the strategies window, which is another option you can preset, you're going to notice that when I click here, I can't change any of these values. I can't change any of that. Why? Because my trade manager is turned on. So if that's the case, first thing you need to do is turn your trade manager off. You're going to notice the only one that is black, everything else is dark gray. The only one that's on is the enabled tab. That's your on-off switch. So first thing you need to do is turn it off, apply, that's very important. And now you can change any setting you want. So if you want to preset your quantity, how do I do that again? No, I can preset my risk. Oh, maybe you can't preset your quantity. I thought that you used to be able to do that. All right, well, I won't waste too much time with it here, but by turning the trade manager off, it allows you to make changes, and then once you have all your changes, you can save them. So go here, save, type in a name for your template so that you don't need to redo it all the time. See, I've got a few different templates here. Then when you have everything the way you want it, go back to your Enable tab, turn it back on, your Trade Manager. So go to True. Remember to click Apply. It's very important. And then you'll have your Trade Manager with your new settings. All right, so here comes that reaction now to the 4,300 area. So class, who do we think is in control of the market? Do we think the buyers are in control, or do we think the sellers are in control? Yeah, okay, good. Everybody's saying sellers. And yes, the sellers are definitely in control. Where have the buyers dug in their heels? Where do we know there's very active buying? Anybody? Would it be easier to see on the Eagle? Yeah, you don't need to give me an exact price. I'm just... Ryman was focusing on the price. Yeah, okay. Good. No, you guys are doing well. You're all more or less in the same neighborhood. You could have just told me the swing low, the recent swing low. Some of you are saying 43.29 half. Some are saying 43. Some are saying 43.96. You're all right. It's all in this neighborhood right here. The extent of the buying, the point where the buyers really kicked in, is the low of this candle right here. So technically 42.95 and 3/4. This is where we know where the buyers dug in and or the selling evaporated. I have a feeling though it's more the buyers kind of digging in their heels a little bit. All right, so the sellers made a little bit of an effort here. But if you were looking at this market and you just saw this big move shoot past you, would you be keen on shorting around here, around 4,300? Or would you rather not sell, say, up here around 43.10, or even if the market let you and got back up here to 43.20? You'd want to, obviously as a seller, you'd want to sell here at 43.20 in anticipation that the market would go back down here and retest the lows. Now what ended up happening is that most often the smart money, for lack of a better term, won't let the market retrace all the way back up here to 43.20 or 43.30. These guys got on board early. That's why these hard edge bounces work the way they do. Now we're going to see some breakout traders try to hop on board here as the market retests the low. And it may not be a bad trade, it's just that you've got to hold, right? If you short right here, you've got to be prepared to hold all the way up here, maybe even all the way up here. It's not that it's not a viable trade, it's just this is going to be your risk. Placing your risk anywhere else is, well, you're very likely going to get stopped. Well, thanks, Ryman. Ryman says, my explanation this morning was great. I always hope that when I get into this kind of stuff about the price activity that your eyes don't glaze over and I end up confusing you more. So that's never my intention. So we know, the sellers really got busy here around 43.20. I could see a retracement back to 43.20 and maybe the buyers, or pardon me, the sellers knock it down again. Shorting at this level, like I said, is a lot more difficult. Okay, so here's the breakout traders taking the plunge. Mo asked, Eric, do you trade the Russell? I haven't, Mo, because it hasn't been part of my data assortment, but I've got a new data stream. Let me see whether it is in my assortment. I haven't even added the current Russell contract, so let me put that on there. Some people really, they love the Russell. They think it's a purer market. We'll see if it loads here in a second. So the breakout traders catching a little bit of a move. These are always the ones that make me nervous, these types of trades near the bottom. Big move down. Buyers, we know, have gotten stronger. Here's the breakout. Do we try to go for it? Well, in this case, the market actually fudged enough that you could have got your profit objective out of the deal, got your remaining trade to break even, so no harm, no foul. What happens other times is that the market will push through by a tick or two and then turn on its heels. Okay, it seems I do have Russell data, but I don't know if it's streaming. It hasn't ticked at all, so if you're following the Russell, you can tell me. Oh, you know what I can do? I'll throw a Geiger counter on here. Geiger counter, great tool to see whether or not you're got streaming data. No. If you're like me and the Russell is not part of your assortment, you can try to follow the mid cap, the EMD, which is kind of the twin to the Russell, but it's traded at the CME. And you can see it makes the exact same shape as what we just saw on the Russell. Trades for the same value. It's a little bit thinner than the Russell, but not so much that you would notice. I haven't traded the mid cap for a while, but when I did, I never got slipped. Or certainly never got slipped any worse than any other market. But Mo, for my way of thinking, and obviously I have no affiliation with the NASDAQ, but the NQ is pretty tough to beat. You can see we get decent volatility out of the market. It's $5 a tick. You get some very nice moves. I hadn't looked at the NQ for the longest time, and I've shared this story with you guys before, how a little old lady in Florida, and I wish I could remember her name. I'm going to have to look her up. I do have her her information. And I forget exactly what I was trading, because this is 4 or 5 years ago, or actually probably longer than that, maybe closer to 10 years ago. We were in a trading room, and she was always telling me, Eric, I took 500 out of the NASDAQ today. Oh, I took 1,000 out of the NASDAQ today. Oh, I took 800 out of the NASDAQ today. And I'm thinking, why am I not looking at the NASDAQ? So I did. I gave it another look, and I really liked what I saw. I haven't followed up on it, but I know there have been plans to move the Russell to the CME, or to give the Merck a Russell equivalent, which would make a lot of traders happy. Now, of course, if the Russell is your vehicle of choice, you only need to pay the ICE exchange. But I think the ICE just did something silly with a rate hike or something. Jim was telling me about the other week that the Russell, the ICE exchange just imposed a huge rate hike. Okay, so some of that early momentum is waning a little. We're getting a little bit of sideways action here. It's not uncommon to see the market trying to enter a little bit of a downward trading channel, if you will, after a big breakout like that. But this is also the type of situation where when you have a strong market, sometimes you just need to get in. Now, at this stage, I wouldn't necessarily hop in down here. I would wait, see if the market doesn't give me a retest, one of these hard edges. That would make for a more predictable buy. And we can see that we're getting, the big downward leg, smaller leg, right? Big progression here. Now we're starting to get a little bit of overlap. Oh, that one may actually have some follow through to it. And if they come up here, somewhere through here, we're going to start seeing this kind of thing going on, where we're just retracing the same prices over and over. And then the market will give us our retest of the low. We'll get our soft edge buy signal here on the Raptor, and then we'll look for a retracement here to the hard edge. And then once it gets up here to the hard edge, the sellers will probably get a little bit more active, and they'll try to recover the downtrend. That's the plan. Let's take a look at what's going on here on the hawk. Yeah, you can see we're starting to introduce some yellow bars. Big move lower off that first micro-macro cross. Sometimes these early moves that you see, they're really worth trying to put a runner on, because if you can take multiple contracts, I'm going to start doing this in the room. Instead of on the hawk, the first trade just going all in, all out, I'll split it. If I can get more than one contract in play, I'll try to run one out, because sometimes very early, you see a crazy move like that. See more yellow bars now on the hawk, some of that sideways overlap. I think we are going to see a little bit of an uptick here. Nothing too crazy, but maybe enough that we can profit, and I'm going to get more aggressive with my stop. Go with the bar high low. Oh, is it going to make a difference? There we go. So we'll just try to capture a little bit more of that open profit rather than let the market retrace all the way up here and then take me out. We'll see whether that was a good call or not. So how did we do there? Not bad. $255. That's all right for a little bit of a move. We caught this rather late. We didn't pick it up till, where did I get in? Right here, I think it was. I'll have to check my paperwork. So here on the Raptor now, waiting for that little move lower. Come on, give me that little itty bitty retest. Oh, give me more than that. So the buyer's trying to get stronger. Sellers should try to knock them down somewhere here as we get closer to this whole 4298, 4300 area. We should see the sellers try to recover the trend. Give us a little itty-bitty test of the extreme, and then we'll see whether the buyers can get it together and come back with a soft edge buy signal. Now, if they don't, I'm still going to have to try the soft edge buy. Maybe what I'll do is I'll just go in with a single. Oh, and I'll go all in, all out. Let's do that. Come on. I want to go take a look at the Falcon to see if I'm getting a trend change signal, but as soon as I leave this chart, I'm sure I'll get a buy signal. All right, so here's now is the active selling. We're seeing the sellers trying to recover the trend. We've got some sideways trading going on. It's probably, yeah, I was going to say we're going to get a green bar sell, but it's already changed over to all green. We're waiting for a first micro-macro cross. The macro line not in sync yet. And we are working a possible trend change signal here on the Falcon. No signal yet on the Eagle. So everything kind of teeing up the same way. I'll go back here to the Raptor, although it looks like we're going to get comparable signals on the other tools. Come on, just a little bit more. Is that all you're going to give me for a retest? You scoundrels, you. Come on, give me that signal. Come on. Shoot. No, don't have the first micro-macro cross yet either. Stinkers. This was the soft edge buy? Really? Yeah, really. So you see, as we're getting into the hard edge, closer to this 4,300 area, we're encountering more selling. This is where the sellers stepped in before. And they tried to recover the market here at 42.98. Really? Are you not going to give me a soft edge buy signal at all? Well, here's the first micro-macro cross now in the hawk. So the signal's printing right here. I'm going to cover below the low. Now we're getting a macro pullback. Because this is counter trend, feel free to dial down your risk amount. What I should be doing, what I normally do in an instance like this, is I only look for sell signals. Because the market has been paying off in a big way to the downside, this is very, very risky to try to go the other way. Just so you know. Sometimes you're better off just waiting to get another with trend signal. But things have slowed up quite a bit, haven't they? All right, Ryman, see you tomorrow. Come on, get up there now. Where was that hard edge on the band again? 43.06. I'm going to disable the break-even trigger. Oh, looks like it was there anyhow. Did I disable the wrong one? No! Don't tag me. Get going. Come on. You know you want to. Get going. Shoot. What what I wanted to do was hold my stop a little bit deeper until we got a little bit more traction here. But I think I disabled the wrong tool and it got tagged. So here we've got our soft edge buy signal now on the Raptor. So still looking for that retracement to the hard edge. The stops do need to go below the low. I could see, getting up here to 43.07, maybe as high as 43.10. Shoot, if we got all the way up to 43.20, that would be a home run for the bulls. To recover the market that far in this kind of downtrend? So the soft edge sell, our initial target, always the hard edge. I guess it's almost time to roll over crude oil, isn't it? Get into the July contract. I'm watching June crude, wondering why is it not going anywhere? Well, it's because it's going to expire tomorrow. Oh, come on. My goodness, they're dragging. So this is why you don't want to take counter trend trades if you can help it. So we've obviously got a big downtrend. What is this looking like to you? Doesn't that look a whole lot like a bear flag? What do the markets usually do when they break out of bear flags? Don't they resume the downtrend? Mm-hmm. Yep. Mm-hmm. This is why counter trend trading is so difficult. So big struggle now on these highs at 43.02. See the buyers fight it up, sellers knock them down. The width of this bar is getting wider by the minute because of all the volume associated with it, all the traffic, if you will, going through here. Here's the Geiger counter. You can see there was a big selling push as we hit 43.02. Is it going to hold, or are the buyers going to push on through there? If they push on through 43.02, we're almost guaranteed to hit the hard edge. Here, oh, I was going to say the buyers were chewing through some orders. Oh, they're trying. They're trying. Oh, that's a good sign for us. They're trying to get through there. Come on. Oh, get it. Oh, shoot. There we go. Let's hold it and hold it. Oh, there's some pretty serious buying going on. Come on. Somebody take the other side of 43.02 already. You know you want to. Here, we'll give you a little push. It'll help. There you go. Get up there. So if you guys, if you watch the news, you may have heard about the fires up in Fort McMurray, Alberta, how it wiped out like a quarter of the town, and it's a huge fire. They're actually expecting rain the next few days, which will hopefully give the firefighters a chance to get the fire under control. But there's a lot of people who have been displaced and lost their homes and businesses and whatnot. Well, we're going to a little fundraiser tonight. A local brewery is putting together a little activity, so we're going to go there with friends, and hopefully there's no silent auction. My wife loves silent auctions. She's very good at them too. That's how I ended up with a $40 corkscrew. It's nothing fancy. It's not like it's an automatic corkscrew. It's just a waiter's corkscrew, the kind that you buy in the dollar store for $1. But mine has a nice little wood inlay in it. It was only $40. What a deal. Actually, to be fair, it is my favorite corkscrew. All right, here we are again, 4302. Come on, somebody get on the other side of 4302. If we see that, then these buyers are going to start to, or pardon me, these sellers are going to start to wonder if they're on the right side of the trade, and they're going to ditch, because we had selling here, we had selling here, we have selling here. There we go. Finally, somebody takes the other side. Come on, get up there a little bit more. You got to get to the hard edge. Let's go. I haven't got all day. See where parabolics are at. Yeah, parabolics are right below this swing low. You see how this bar has got this tail to it? I could bring my stops either below this bar here or this bar here. Each of these little swings show us a place where the sellers try to recover the trend and the buyers push them higher. Sellers really tried to recover the trend. Buyers push them higher. So if they fail at this point, it's probably enough to get out at 42.97. So we'll see. I'll try to hold my stop back. I'll try not to get too excited. Hopefully I'll hit the break-even trigger. Otherwise, I may stop out here at 42.97 if they, well, you know what? Why don't I just take 42.97? There we go. Andrew asked, what gave you the information that this would come up to the hard edge on this time as opposed to previous retraces? Well, that's the beauty of the hard edge, is that the market does have a tendency to try to recover to the hard edge. Let me go back here to yesterday. A little bit of an uptrend. We get a soft edge sell signal. The market tries to retrace to the hard edge. It's got the soft edge sell signal here very late, but the market tops out, retraces to the hard edge. Market turns, goes to the hard edge. Market turns, goes to the hard edge. Here's a soft edge buy signal, which unfortunately came in a little bit late, but the market goes to the hard edge. It's just what it has a tendency to try to do. Now, unfortunately for me here, the selling activity near the highs did not yield, not yet anyway. I might have been a little bit too fast with that stop. But hey, it is a downtrend. Yeah, Andrew says yes, but just recently it had a number of attempts to get back to the hard edge. Yes, you're correct. I think it's still going to get up there. I think I was a little bit too fast with my stop. We're always dealing with probabilities. It used to annoy Adam to no end when I would say, well, the market's going to go to 43.06. And it would eventually go up to 43.06. And he'd say, how did you do that? How did you know? Well, it's a guess, right? I'm playing the probabilities. The probability is that the market will try to retrace into the hard edge. Will it do it 100% of the time? No, absolutely not. We're in a strong downtrend. 43.04, which seems to be the high, may be the best that they can do. And we may see another leg lower. But the odds are very good. We're going to see the market swing here one more time and work its way up to 43.06. Those are just the probabilities. So whenever it seems to you like the market is bottoming out, and the reason I think it's bottoming out is because these legs are getting progressively shorter. It seems as though we're starting to move sideways. We've had now a buy attempt that technically just managed to break this swing high. It wasn't a very convincing break, I'll give you that. But if we see this leg also in this sideways range, and now we see, let's say we see the buyers recover it before it takes out this low, then there's a good chance the buyers have control and they're going to try to take the market higher. How much higher? Well, first stop would be the hard edge. Next stop would probably be 43.15 according to the chart. Where are my support and resistance lines at? 43.12 is the primary, so it seems like somewhere in that neighborhood, 43.12, 13, 14, 15 would seem to be a plausible target. So at this point, we're just trying to get a feel for how is this going to play out? Who has control? Right now, the sellers do, but is it convincing? No, not really, because prices are still more or less sideways, aren't they? So here come the buyers. And what will happen from here is we're going to generate a buy signal, and those who think the market will go higher will buy and hope that it will take out the high. If the sellers are in fact stronger, they're going to knock it up here, and we're going to end up with a double pullback signal, at which time the sellers are going to recover the market and send it lower. How can you tell which one it will be? Well, it's hard to tell to be sure because the market is sideways at this point. However, the buyers own the last swing, providing that this bar also finishes bullish. So the buyers have very short-term control. Sellers have long-term control. There's a good reason to suspect that the sellers are looking for a better price to sell from. You know, they got active here around 43.04. So, you know, they're anxious. The sellers are a little trigger happy. But would they rather sell 43.10, 43.12, 43.15? You bet. So that may give us a little bit of an uptick here still. Like I say, counter trend trading is always more difficult. I'll take the signal just to show you. But the better play, there's the signal. The better play is to look for the hard edge bounce, get that double pullback, and look to short. But I might get a lucky break on this one. See, here come the sellers again. Sellers stepping in early. They're shorting 43.02, and they're always going to sell early. If the sellers are really aggressive, they're going to sell early. Just like the buyers tried to buy early. So this is the crux. This is the decision point. This is why for a counter trend signal even, you can look at a second push entry. You can let the signal engage, show you the limit, and now try to buy in and hope that the market's going to go up. You're never really going to know with 100% certainty. I'll let it bring me to break even if we hit this high. And you can see we're trying to get now into the hard edge. Come on. There's the reaction to this previous high, which is to be, again, anticipated because, hey, the sellers stepped in, they pushed the market down. Just like what we were looking at this morning. Where is the selling more aggressive, here or here? Could even extend it like this. Well, probably here. Why? Well, because the buyers made a good push higher, right? This is serious buying effort. And this actually had some selling follow through. The sellers came in and they tried to knock the market back down. So I would say this level here has got the stronger selling. So when we get back up here, the sellers are going to try to knock it down again. And if this level fails, well, that's why I said, 43.10, 43.12, 43.15, those are all, something in that neighborhood is very plausible. Come on. But we do need to see them break this level right there. If they can't take out that 43.03.04 area, what is the high of that bar anyway? 43.03 half. All right, so we're looking for 43.03 3/4. Here come the buyers. We're going to see more active selling as we get back to this 43.03 half line. In fact, I'll take my break even to 43.03 3/4. All right, so we're 0.1 half. Come on, we got a couple points to go. Let's go. So very, very strong selling now at 43.03. Very strong selling. Sellers turn the market here. Well, they initially turned it here. Sellers turned it again here, turned it again here, turned it again here. So there's a lot of selling going on here. If the buyers push and get 43.03 3/4, we're going to see a little bit of an uptick here. Here they come. Sellers trying to knock them down again. Buyers recovered it early though. They recovered it here. They recovered it here. They recovered it here. Oh gosh, come on. So now here's the double pullback with trend signal. This is again why counter trend trades are so difficult, because it leaves you out of the with trend signal. You could take a second push on that. You could short it below this low, 42.97. It's starting to look a little bit like a trading range though. All right, one more time, just for good measure. I would consider this close enough to finding the hard edge, even though technically we haven't engaged the hard edge yet. If we're within a tick or two, that's close enough. Same thing if we fudge it by a couple of ticks or even a couple of points, that's still a hard edge bounce. All right, come on, buyers. Wow, every time they get close to 43.02, the market starts to knock them back. All right, I think I'm going to get serious about bringing my stop in. I'll just give them that bar right there. Because I think we're going to see a resumption of the trend. Maybe. Yeah, and there we go. So now we're getting, again, our double pullback signal, and we're producing the short signal, and the initial signal came right here. The double pullback occurs when we see two moves into the hard edge. The market comes out of there, produces a signal, and it's normally a trend resumption signal. Or in this case, we would anticipate some sort of retest of this 42.90 area. Really starting to look like the market's moving sideways though. So, a lot of times, and I've mentioned this before, and this is a huge benefit from journaling your trades. You find out that if the market is trending in one direction, if it's paying off in one direction, you're usually just better off waiting for that opportunity to get back in with the trend. It's a more predictable trade. You saw how we were trying to nurse this this buy trade, and it just would not go. Every time it got up there, it got knocked down, got up there, got knocked down. We produced the double pullback signal, either this one or this one, and then the market starts to go down. First micro macro cross here. It's at the bottom end of the range, which makes it less likable. We can take a second push on this one, however. Oops, wrong button. I wish that they had, and this is one of my pet peeves, I hope they're going to get around to correcting it, why they had to put two blue buttons beside each other. Really? There's no other colors to choose from? Oh, programmers, they're so funny. Okay, just looking for the market here to try to recover this downtrend. Shorting the bottom end of a range, always a little bit more difficult. As this may well develop into a macro pullback, maybe even a green bar sell. That's why my stop is way, way, way up there. We're getting too much overlap, folks. Too much sideways trading. The Falcons may be working on a trend change signal, but look at this. This looks like a roller coaster, the trend line. The longer the market takes to try to recover the downtrend unsuccessfully, the more likely it is to reverse and go the other way. So the sellers got to get their act together. We're getting a possible trend change signal here. We've got the warning dot. Look at how thin all these bars are, though. Compare that with some of the earlier bars where there was actually some volume. There's no volume. There's hardly any market participation. 470 on that bar, 925 on that bar, 991 on that bar, 1500 on that bar, so very, very thin. 6700 on this bar here, this fat one. 5600 on that one. How many do we need to overcome? So just shy of 3,000 on that swing low. Andrew's asking about the thickness of the bars, why the bars are doing that. This is the indicator warehouse dynamic equivolume bars. You may just have the regular candlestick. This is an add-on. The cool thing about the dynamic equivolume bars is that they will work on any chart style. Normally equivolume bars only work on candlesticks, but the dynamic equivolume bars will work on range bars, they'll work on Renko bars, tick bars. All right, so I'm going to assume that we're going to print a hash mark down there, which we did. And what they do is they show you the volume, a visual interpretation of the volume. All right, so we need to overcome, what did I say volume was here? Just shy of 3,000 contracts. So between the selling that started right here, there's 900, there's 2,100, so that's 3,000. There's another 600. Well, we're gaining on them. All right, we've hit the break even. Doggone it, hit the break even again. I may have to disable that break even trigger on a day like today. The market's just a little bit too whippy. It keeps looking behind, tags that break even. Let's go back here to the Falcon trade, see if we can't get this market to make its way a little bit lower. Come on. Oh. You want to head lower, you know you do. Well, we're back to the top of the hour. They're just content to chop around here a little bit. Now that the buyers have stepped up again, I'm going to be looking for an opportunity to resume, the downtrend to resume, and for a chance to start to roll my stops in a little bit. So ideally, I'd like to see at least a couple of bars to the downside. That would give me an excuse to roll my stops in. There's one. Let's see if we get the other. Okay, so we got a couple bars now in our favor. We may as well start to roll our stops up a little bit. And we'll see whether or not they can finally take out that low. All right, you guys, we're going to close up shop for today, and we'll see you again tomorrow morning. Oh, while I think of it, there will be no trading room this Monday. I'm not going to be available this Monday. So make a little note on your calendar, the 23rd, no trading room. But I'll try to remind you again tomorrow. All right, you guys, we'll see you tomorrow morning then. Bye for now.